Hi everyone, I am Khushboo Chokshi and I hope you're studying well for your November 20 examination. Yesterday the institute has come up with the RTP for your November 20 examination. What I've done is I've quickly put the RTP questions and answers together. I've highlighted the answers for MCQ type of questions so that it's easier for you when you revise it. We'll discuss why that particular answer has been given just to revise and brush up on the provisions of the particular section. For the descriptive type of questions, what has been done is I have put it into two parts. One is the short answer and one is the detailed answer. The detailed answer is the answer which has been provided by the institute. So in that detailed answer, what I have done is I have highlighted whatever are the important points which you have to write in your examination, and then there's a short answer which will help you quickly run through the RTP questions and answers before your examination. I'll be attaching this file along with the video so that you can download it and print it and read it for your reference. The amendments which are covered in the RTP for the November 20 examination, I have done the revision video for most of the things, and I'll be putting up revision videos for the other chapters as well. So that will be for the November 20 examination only. So that will help you revise the entire chapter together in one shot. Okay, so now quickly going through the MCQ type of questions. There are two questions which have like a long gist of what the facts of the case are, and then the MCQs are asked. While I am reading the question, I'll be highlighting the important points so that you know how you understand how to read the questions and to read the questions and highlight whatever is important so that you can answer the questions accordingly. Okay, so starting with the first question. Mr. B.R. Mohanty, around 2 decades back, along with two of his elder brothers and few friends who are pharma and chemical engineers by profession, promoted two companies. First being Wellmount Limited, dealing in wellness products and pharmaceuticals, whereas the other is Textmount Limited. Both are limited companies and not private limited, dealing in textile products. During these 2 decades, both WML and TML has grown magnificently as both the sectors expanded beyond imagination. Both companies went public and stock of same listed on leading stock exchange of countries. TML did well in the past and emerged as a major export unit, but in the recent years, the textile sector witnessed stiff competition due to the new entrants. The increased cost of the workforce and other input material is also made sector unprofitable, and recent lockdown hit the sector further adversely. TML's bottom line for current financial year is red. TML was declaring dividends in the very first year of operation and willing to continue the tradition and considering dividend as signaling effect to an investor for valuation purposes. Rate of dividend for the recent 5 years was 9%, 10%, 8%, 5% and 2% respectively. 9 being 5 years ago and 2 being the previous year. The management at TML decided to declare dividend out of the profits of the previous year. TML deals in export, hence came under the scanner of the enforcement authority, who seek financial statement and books of accounts of TML for scrutiny for the last 10 preceding financial years. In response to the notice, TML furnished financial statement and books of accounts for the last 8 immediately preceding financial years, stating as per its articles of association, TML is required to maintain and keep the books of accounts for 8 immediately preceding financial years only, and that too without any record of vouchers pertaining to such accounts. WML is doing well. It seizes outbreak of COVID-19 as a business opportunity and registers significant growth in both top and bottom line. For the past many years, WML declares a dividend at a constant rate of 20%. During the financial year 1920, WML earns a profit of Rs 580 crores. Board of Directors of WML declares 25% dividend without transferring any percentage to reserve on 15th of June 2020. On 14th of July 2020, some of the amount remaining unpaid due to the operation of law has been transferred to unpaid dividend account on 20th of July 2020. CA Dev was appointed as an auditor under Section 139 of the Companies Act 2013 of WML in individual capacity during the 17th AGM for against the financial year 18-19. So this is what the facts of the case are. Now coming to the questions. In case of TML, which of the following statements are correct regarding the declaration of dividend? TML is the company which has been declaring dividend, the first company here, and which has incurred a loss in the current year and wants to declare dividend in the current year out of the previous year's profit. Now they have given us the rate for the last 5 years. So if you are a company with inadequate profits, then you have to declare dividend out of previous year's profit at the average rate of the last 3 years. So in this case, the average rate will be 8 plus 5 plus 2, that is 15, divided by 3, that is 5. So TML can declare the dividend up to 5%. CA Dev, who is the auditor of WML, have to vacate the office of the auditor in and can be reappointed only in. When can he be reappointed? Because he is being appointed in the individual capacity, he can be appointed in the after 5 years, that is 22nd AGM and the 27th AGM. In case of WML, which of the following statements is correct regarding the declaration of dividend? Now WML is the second company which has a profit of 580 crores in the current year. It has been declaring dividend at the rate of 20%. It wants to declare a dividend of 25% in the current year, and it does not want to transfer anything to the reserves account. So which of the following statement is correct? WML can't declare dividend at the rate of more than 20%. There's no such restriction, so that's not a true statement. WML can declare the dividend out of current year's profit, but it needs to transfer a sum equal to 20% to reserve first. If you are a profit making company, if you want to declare dividend, you may transfer an amount to the reserve account. It is not necessary or mandatory to transfer the amount to the reserve account. So this is again not true. WML can declare dividend out of current year's profit, but it needs to transfer sum equal to 10% of paid up share capital to reserve first. Again not true. WML can declare the dividend out of current year's profits without transferring any percentage to reserve. Now the fourth question. In case of TML, regarding maintenance and keeping the books of accounts, which of the following statement holds true? TML was asked by the authority to give the books of accounts for the last 10 years, but it said it has maintained an account for a period of 8 years, which is fine. But they have also mentioned that it has not maintained any record of vouchers pertaining to such accounts. So that is something which is not correct, and hence we go to the third option. TML violates the provision of the law because it keeps the books of accounts for 8 immediately preceding financial years without keeping relevant vouchers in the record pertaining to such books of accounts. Regarding declaration and distribution of dividend by WML, which of the following statement is correct from the view of the timeline? So WML violates the law because some of the dividend remains unpaid irrespective of reason for non-payment. That's not true. If you have unpaid reserves, that's okay. You can transfer it to the unpaid dividend account. WML violates the law because unpaid dividend needs to be transferred to unpaid dividend account by 19th of July. Now, here the dividend has been declared on 15th of June 2020. On 14th of July 2020, the amount has been paid. Now, once you make the payment for the dividend, if there is any unpaid dividend, within 7 days you will have to transfer that unpaid dividend to the unpaid dividend account. So from 14, 15, 16, 17, 18, 19, 20, 21st. So by 21st of July you will have to transfer the amount to the unpaid dividend account. So again, this statement is not correct. WML does not violate the law because an unpaid dividend transferred to the unpaid dividend account prior to 21st of July. So that is how this answer is correct. Now coming to the second question. For this probably you need to just write down, or probably I'll just write it down for you so that it has a lot of details in this question. Mr. Purushottam Prasad, a business graduate from leading B school running the chain of restaurants as sole proprietor concern based in Chennai, Mr. Prasad, being dynamic businessman, in order to develop the business, decided to give corporate form to his business, but concerned with dilution of the control over the business decisions. Mr. Prasad, during some journey, met Mr. Chinmay Das, who is a school days friend of Mr. Prasad and presently working in one of the leading corporate advisory firm. Mr. Prasad seeks advice from Mr. Das regarding conversion of sole proprietorship to company and also explain his intention to keep the entire control in his hand. Mr. Das told about the new type of company which can be formed under the Companies Act, OPC, one person company. Mr. Das quoted section 262, which defines one person company, a company which has only one person as a member. Mr. Prasad felt OPC is the correct form of business for him, hence promotes an OPC, Casa Hangout Private Limited. So we'll just write that down, okay? So OPC by Mr. Prasad, which is Casa Hangout Private Limited, OPC. On 14th of September 2019, to which he sold his sole proprietor business and himself became a sole member. Mr. Prasad appoints his younger son, Mr. Vijay, who was 21 years old then, as nominee to the OPC. So the nominee to this OPC is Mr. Vijay. Okay. Mr. Anand, who is an old friend of Mr. Prasad, was appointed as director of OPC. Mr. Anand is the director. Okay, so this is about this one OPC. Mr. Vijay, so this, who is the nominee, is a professional photographer and for certification course went abroad on 23rd October 2019. So Mr. Vijay is on a trip from 23rd October 2019. He came back on 1st of March 2020. He established photo studio in form of OPC. So now Mr. Vijay is opening another OPC in the form of OPC, Best Click OPC Private Limited. So Mr. Vijay is floating a new OPC which is called the Best Click OPC Private Limited. Okay, on 20th of March. So everything is happening in the same financial year. Okay, now in which Mr. Prasad is the nominee. So father has said that the son will become the nominee. Son is saying father will become OPC nominee. So nominee is Mr. Prasad. Sorry for the bad handwriting. I think I have to do something about it. Yeah. So Mr. Prasad is the nominee and he became the sole member. In the meanwhile, Mr. Vijay also gave his consent as nominee to another OPC in which his elder brother Mr. Shankar is the sole member. So, Mr. Vijay, nominee for Mr. Shankar's OPC. Okay, so he's become nominee at another OPC also. Mr. Prasad met an accident. Who is Mr. Prasad? He is the father who's got the first OPC. He met with an accident on 25th of March 2020 in which he lost his life. Nomination clause invoked resultantly Mr. Vijay to take charge of Casa Hangouts. So Casa Hangouts, which was promoted by Mr. Prasad, the nominee was Mr. Vijay. Since Mr. Vijay's Prasad is no more there, Mr. Vijay, who is the nominee, will now become the person who will be taking charge of that OPC. And as a member with immediate effect. On 30th of March 2020, Mr. Shankar was appointed as new nominee to Casa Hangout. Mr. Shankar is the person in whose OPC Mr. Vijay is the nominee. So he is now the new nominee to Casa Hangouts. who gave written consent on 31st of March 2020. Mr. Shankar, who is the investment banker by profession, is of the opinion that CASA Hangout needs to amend its object clause and add carry out investment in securities of body corporate as one of its objects. Financial period closes 31st of March 2020. Financial statements of CASA Hangouts Private Limited, which is not containing the cash flow statement signed by Mr. Anand, who left as only director after death of Mr. Prasad. This is the entire case study. Now we'll have to answer the questions pertaining to the same. With reference to the appointment of Mr. Vijay and Mr. Shankar as nominee to CASA Hangout OPC, out of the following statement, who is eligible to become a nominee of a OPC? CASA Hangout, the first is Mr. Vijay, who is the son, and on death of Mr. Prasad, the second nominee is Mr. Shankar. So, for appointing a nominee of one person company, the most important thing is that the person has to be a citizen of India, he has to be a resident of India, and he cannot be a minor, and he has to be a natural person, that is a person who is not an artificial legal person. So, any natural person excluding minor, any legal person excluding minor, any natural person who is a resident of India but excluding minor, and the fourth point, which is the correct answer, is any natural person who is a resident as well as a citizen of India and excluding minor. Mr. Shankar, if wish to withdraw his consent as a nominee, can do so by giving written notice to. Mr. Shankar is a nominee to the Casablanca. After Prasad's death, he has been appointed as a nominee. If he wants to withdraw his approval as a nominee, he can do so. He has to give a notice to the member of the OPC and to the OPC itself, and then the OPC has to give a notice to the registrar within 30 days. So the third answer is the correct answer, sole member of OPC and to the sole member of the company and to the OPC. With reference to the legal position of Mr. Vijay as member and nominee to various OPC, which of the following statement is correct with reference to ceiling limit in relation to membership and being nominee to OPC? A person other than a minor at a specific point of time. One person can be a member of one OPC at one point of time, and he can be a nominee of one OPC at one point of time. That is the correct answer, correct? He cannot be a member of multiple OPCs, or he cannot be a nominee of multiple OPCs. Which of the following statement is correct in reference to the requirement for financial statements of CASA Hangout Private Limited? The CASA Hangout Private Limited has to be signed by only one director. With reference to the opinion of Mr. Shankar to add carry out investment in security of body corporate object CASA Hangout Private Limited, what is the opinion? OPC cannot carry out non-banking financial investment activities and investment in securities. OPC cannot, a private limited company cannot again invest in another company. That will be covered under the NBFC regulations. Okay, so the two major questions which has a case study and the answer ends here. Now we'll quickly go through the other provisions. A is residing in Delhi and has a house in Mumbai. A appoints B by a power of attorney to take care of his house. State the nature of agency created between A and B. A has appointed by power of attorney, so it's a express agency. One person company shall file a copy of duly appointed financial statements to the registrar. The duly appointed financial statements has to be filed with the registrar within 30 days from the date of the AGM, but OPC has a special provision wherein it allows 180 days from the closure of the financial statement. A guarantee which extends to a series of transactions is called a continuing guarantee. An aid that expresses the scope and objects and purpose of the act is called as the preamble. Now again a small case study. Roma along with 6 friends got incorporated Roma Trading Limited in May 19. She kept the paid up share capital at rupees 30 lakhs. Further, in April 20, she noticed that in the last financial year, the turnover of the company was well below 2 crores. Advise whether the company can be treated as a small company. To be treated as a small company, the two most important requirements are that the paid up share capital has to be less than 50 lakhs, turnover has to be less than 2 crores, but it can be only a private limited company. In this case, it's not a private limited company, it's a limited company, and hence part B is the right answer, wherein it cannot enjoy the benefits of a small company. Question number 8, Red Flag Limited, which has its registered office at Delhi and having 12,500 members, is holding its AGM in Ashoka Hotel. Despite swanky arrangements, most of the members did not turn up and the quorum was not present within half an hour of the scheduled time of the meeting. As a result, the meeting was adjourned. However, due to heavy booking schedule, hotel authorities could not make available for adjourned meeting sufficient space in the same hall where the meeting was originally called, but allowed conduct of meeting in a different hall on a different floor next week at the same time. Please advise on the options. So it has to be at the same place, same time next week. So even if it's not the same hall, it's fine, but it's still conducted at the same place at the same time, and hence the meeting is a valid meeting. Then point number 9, Shreyas Mechanic Limited owns a plot of land which was purchased long before. As the property rates are going up, it decided to revalue the plot of fair value, which is moderately 10 times the original price, thus resulting in revaluation profit of rupees 20 lakhs. The board of directors is keen to utilize rupees 20 lakhs along with free reserves of 24 lakhs for declaration of dividend at the forthcoming annual general meeting to be held on 28 September 2019. For declaring dividend, the most important rule is that you cannot utilize the revaluation reserve which has been which you've got from revaluation of assets. So 20 lakhs are to be excluded from the distributable profits towards the declaration of dividend. Now coming to the descriptive type of questions, we'll quickly focus on the short answers. For the long answers, I've highlighted the important points. You just have to go through the important points when you're revising it on the last day before your examination. Vijay, a member of Mayur Electricals Limited, gave in writing to the company that the notice for any general meeting to be sent to him only by registered post at his residential address at Kanpur, for which he deposited sufficient money. The company sent notice to him by ordinary mail under certificate of posting. Vijay did not receive this notice and could not attend the meeting and contended that the notice was improper. Whether the contention of Vijay is valid, he is asked for the thing to be sent by registered post. A member can ask the company to send the notice in a particular way and pay an extra amount for that, which has to be decided at the general meeting. He's asked them to send it by registered post and he's paid at his residential address, and he's paid an amount for that. So the company has to send it by registered post to the residential address. Here the company has not sent it, and hence the Vijay's contention is valid that the notice is not a proper notice. Will your answer be the same if Vijay remains in London for 2 months during the notice of the meeting and the meeting held? Then if he is in London, even then he is asked to send the notice at the residential address at Kanpur. If they send it by registered post at Kanpur, then it's a valid notice sent. Even if he is in London, they are not supposed to send it to London. Second question. Shekhar Limited appointed an individual firm, Suresh and Company Chartered Accountant, as auditors of the company at annual general meeting on 30th of September 2019. Mrs. Kamla, wife of Mr. Suresh, invested in the equity shares having face value of rupees 1 lakh of Shekhar Limited on 15th of October 2019, that is after his appointment. But Suresh and Company continues to function as statutory auditors of the company. They can continue to operate as auditors because relative of the auditor cannot hold the shares in the company, but the relative of the auditor can hold shares up to 1 lakh, and in this case the investment is up to 1 lakh, and hence they can continue to be the auditors of the company. The board of directors of Ramesh Limited proposes to issue prospectus inviting offers from the public for subscribing the shares of the company. State the reports which shall be included in the prospectus for the purpose of providing financial information and the provisions of the Companies Act. The Companies Act says that the financial information requirements which are given by the SEBI Act will have to be complied with, and the Companies Act 2013 will have to be complied with. Question number 4. Surya Limited is engaged in the manufacture of consumer goods and has got a good brand value. Over the years, it has built a reputation, and its balance sheet as on 31st March 2019 shows the following position. Authorized share capital is 2 crores and 50 lakhs. Issued, subscribed and paid up capital is rupees 1 crores and free reserves is rupees 3 crores. The board of directors are proposing to declare a bonus issue of 1 share for every 2 shares held by the existing shareholder. The board wants to know the condition and the manner of issuing the shares under the provisions of the Companies Act. So it can issue shares out of the free reserves of the company. 1 crore are the issued and the paid up share capital, 1 share for every 2 shares held. So you'll have to issue bonus shares worth rupees 50 lakhs. It has free reserves of 3 crores and hence it can go ahead and make the issue of shares. But it cannot utilize any revaluation reserve which it has in declaring the dividend. Correct? Now, state with reasons. Question number 5. Whether the following are true or false. XYZ Private Limited may accept the deposits from its members to the extent of rupees 60 lakh if the aggregate paid up capital, free reserves and securities premium is rupees 60 lakhs. So, is this true? It's a true statement. It's a private limited company and hence it can accept up to 100% of the amount of paid up share capital and free reserves as a deposit. A government company which is eligible to accept deposits under section 76 of the Companies Act cannot accept deposits from public exceeding 25% of the aggregate of paid up capital, free reserves and securities premium. This is not a correct statement because they can accept up to 35% of the paid up capital, free reserves and securities premium. Question number 6 is a theory type of a question. What are the powers of the registrar to make entries of satisfaction and release of charge in the absence of any intimation from the company? Discuss the matter in the light of the provisions of the Companies Act. So normally when there's a charge on the asset, then the charge is released, then the company has to intimate the registrar that the charge has been released. But if the registrar is aware that the charge has been released, it can make an entry in the books of in the registrar of companies saying that the charge has been released, and in this case it will intimate the company saying that it's going to make such an entry in the registrar, and within 30 days the company has to get back. If the company does not get back, then the registrar can go ahead and change the registrar of companies to that effect. Chetan Limited issued a notice for holding its annual general meeting on 7th of November 2019. The notice was posted to the members on 16th of October 2019. Some members of the company alleged that the company had not complied with the provisions of the Companies Act with regard to the period of notice, and as such the meeting was valid. Referring to the provisions of the Act, whether the meeting has been validly called, how many days notice? Annual general meeting, you need to have 21 days clear notice to be given. So if 21 days clear notice has been given, then it's a valid meeting. If there is a shortfall, state and explain by how many days that the notice falls short of the statutory requirement. Now the notice has been posted by registered post. So once you are posting the notice, then the time period of 21 days starts from 48 hours from the time of posting the notice. So 16th October, 48 hours, 18th October. 18th October to 7th November comes to 19 clear days notice and not 21 clear days notice. So there is a shortfall of 2 days. Can the delay in giving the notice be condoned? There is no provision in the Act which permits you to condone the delay in giving the notice. Then coming to question number 8. Now these are pertaining to the other laws. This is till now what we did was Companies Act. Now about other laws. Sandeep guarantees for Gaurav, a retail textile merchant, for an amount of rupees 1 lakh, for which Sharma, the supplier, may from time to time supply goods on credit basis to Gaurav. So Sharma is the creditor, Gaurav is the principal debtor, and Sandeep is the person who is giving the guarantee. After 1 month, Sandeep revokes the guarantee where Sharma had supplied goods on credit of rupees 40,000. Referring to the provisions of the Indian Contract Act, decide whether Sandeep is discharged from all the liabilities to Sharma for any subsequent credit supply. What would be your answer in case Gaurav makes default in paying back Sharma for the goods already supplied on credit, that is 40,000. So here the kind of guarantee that is given is a continuing guarantee. In continuing guarantee, the guarantor can say withdraw his guarantee and give a notice to the creditor saying that I have withdrawn the guarantee. But whatever transactions has already happened between the two, he will be liable for those transactions. Any further transactions that is happening, the Sandeep will not be liable. So in this case, Sandeep will be liable to the extent of 40,000 because that goods have already 40,000 because that goods has already been supplied to the principal debtor. So he'll be liable to the extent of 40,000. Any transactions after 40,000, he will not be held liable. If Gaurav makes default in payment of 40,000, then Sandeep will have to pay that 40,000 amount to Mr. Sharma, who is the creditor. Okay. Raj gives his umbrella to Manoj during rainy season to be used for 2 days during examination. Manoj keeps the umbrella for a week. While going to Raj's house to return the umbrella, Manoj accidentally slips and the umbrella is badly damaged. Who bears the loss and why? In this case, it's a bailment of goods, but it's a gratuitous bailment of goods. So he's just giving it to his friend, he's not charging anything. But when the goods are bailed and you've been given a specific notice, you have to return the goods in that specific time. In this case, you see he's not returned it within the specific time. So if you don't return the goods within the specific time and then the loss happens, then the person who has the goods, the bailee, will be responsible, and in this case, Manoj will be responsible for the loss. Rahul drew a check in favor of Aman. After having issued the check, Rahul requested Aman not to present the check for payment and give a stop payment request to the bank in respect of the check issued to Aman. Decide under the provisions of Negotiable Act whether the said act of Rahul constitutes an offence. Yes, it's an offence under section 138 of the Negotiable Instrument Act, even if he is not deposited. But once the check has been given and you give stop payment instructions, then that is an offence, and it is an offence under 138, 139, 140 of the Negotiable Instrument Act. Referring to the provisions of the General Clauses Act, find out the day or date on which the following act or regulation comes into force, giving reasons also. An act of parliament which has not specifically mentioned a particular date, then it is, if a particular date has not been given, then the date on which it receives a presidential assent will be the date of the act. Securities and Exchange Board of India issue of capital and disclosure requirement 5th amendment regulations 2015 was issued by a SEBI wide notification dated 14th August 2015 with effect from 1st Jan 2016. So when a date is given in the notification itself saying that it will be with effect from that particular date, then it will come into force from that particular date, which in this case is 1st of Jan 2016. And the last question is, preamble does not override the plain provisions of the act. Comment. Very simple question. Preamble is basically which is given in the beginning, which gives you the object and the scope of the act. It cannot override the existing provisions of the act, but it can be used as an aid of construction, an internal aid of construction while you are interpreting the act. So when you are interpreting something in the act, and if you can't understand whether this makes sense or not, you can refer to the preamble to understand why the particular act has come into force and then accordingly interpret the act, but it cannot override the main provisions of the act. So this is what the RTP is all about. I would request you to download the file and go through the file, and going through the video itself before your examinations would be sufficient for you to understand the RTP. The questions are quite simple. Most of the questions, if you see, are from the study module. The examples of the study module are used as the questions here. So the questions are not very difficult. You just have to remember the correct provisions of the act. Wherever possible, if you can remember the section numbers, you mention the section numbers, and that will help you further. So this is it for the day. Hope you like the video, and hope you study well. Thank you so much.